Hey, welcome back to the channel. You know, in trading, everybody is constantly searching for that one secret edge. But what if I told you that the most powerful edge isn't some crazy complex strategy? What if it's something super simple, something that's often completely overlooked? Today, we're going to break down a trade that proves exactly that, turning a basic principle into a huge win. Let's dive in.
So take a look at this. This is the result we're talking about. It's a position in Broadcom, the semiconductor giant, and it's showing a pretty hefty unrealized gain. But the craziest part? This all played out in less than a month.
Yeah, let's just let that number sit there for a second. Almost 28% on a blue chip tech stock in just a few weeks. I mean, in a market where you're fighting for every single percentage point, a return like this, well, it's an absolute home run. So that's the big question, right? How did this happen? Was it just pure luck, a wild, risky bet that just happened to pay off? Or was there a clear, repeatable strategy behind it all? Well, that's exactly what we're about to unpack.
Okay, so first let's get into the nuts and bolts, the how. We're going to pull back the curtain and show you the exact entries, step by step, that built this winning position from scratch.
And here it is, the proof. This is the actual trade log from the brokerage account. So, no theories, no looking back and wishing. This is just the raw data showing every single purchase. And what's really interesting here is how the position was built. It was done in stages. All right, so check this out. On March 19th, we opened the position with a solid commitment, about $6,000. But then look at what happens just over a week later, March 28th. The stock pulls back a little, it goes on sale. Now, instead of panicking, more shares were added at an even better price. This is classic dollar-cost averaging in action, right? You're buying into weakness, not chasing strength. So here's the bottom line. That disciplined, patient buying led directly to these results. A total investment of $6,900 is now worth over $8,800. That's an unrealized profit of almost $2,000. You can draw a straight line from those strategic entries to that beautiful 27.9% return.
But look, knowing how the trade was put together is only half the story. The real power, the thing you can actually use, comes from understanding why it worked. So let's get to the core principle that made all of this possible.
That's it. The ultimate edge wasn't some fancy algorithm or a secret signal from an insider. It was just this, the discipline to wait for the right opportunity to show up, and then just as important, the strength to just do nothing. And this isn't just some fluffy, feel-good idea. It's a real core investment thesis. Think of it like this. Patience is the bridge that connects your homework, your research, to your actual results. It's the shield that keeps you from making dumb, impulsive moves, and it's the one thing that gives compounding the time it needs to really work its magic. And hey, this isn't some new concept I just invented. The greatest investors in history, the legends, have built entire fortunes on this one single principle. Their wisdom is timeless, and honestly, it's probably more important today than ever before. Warren Buffett absolutely nailed it. The market is basically a big machine fueled by emotion. And the people who can't wait, the ones who chase stocks at the top or panic sell at the bottom, they are literally just funding the returns for those who can sit on their hands. This AVGO trade was a perfect example of being on the right side of that money transfer. And then you've got the legendary trader Jesse Livermore who backs this up. He said that making the right buy was one thing, but the real money, the big money, came from his ability to just hold on. I mean, think about it. The hardest part of that Broadcom trade wasn't clicking the buy button. It was the sitting tight and just letting it work. And finally, of course, the great Charlie Munger just drives the point home. All that frantic activity, the constant buying and selling, most of the time that's just generating fees and taxes. Real long-term wealth is built by letting great companies do their thing over time. The big money truly is made in the waiting. So how can you take this incredibly powerful edge and actually apply it to your own strategy? Let's boil this whole thing down into a simple, practical framework that you can start using like today. It really all comes down to these three pillars. Number one, the discipline of the entry. You have to fight that fear of missing out and just wait for great companies to come to you at a good price. Number two, the art of sitting tight. Once you're in, your main job is to get out of the way and let your investment grow. And number three, weathering the noise. You have to learn to ignore the daily headlines and the crazy volatility and just trust the long-term reasons you bought in the first place. So I'll just leave you with this one final thought. In a world and a market that is constantly screaming at you to Do something. Buy this, sell that, react to this news. Maybe, just maybe, your greatest, most profitable move is to have the discipline and the patience to simply do nothing at all.
Hey, if you believe in the power of patience, do me a favor and hit that like button to let me know. And of course, subscribe for more deep dives into the strategies that actually move the needle. Thanks for watching, and I'll see you in the next one.